And right now it's time to welcome our first guest, Peter Morici, a professor at the Smith School of Business at the University of Maryland. He's also a former chief economist at the U.S. International Trade Commission. You can follow Peter on Twitter at pmorici1. Peter, thanks for joining us today on the show.
Well, nice to be with you, always.
So you're a professor. You're used to grading and evaluating people, right? So, okay, let's grade the president. How's he done economically? Even things that he did directly for the economy and indirectly so far in his term.
Well, we got the tax cut, we had the deregulation, we had the changes in the courts, which are very, very beneficial to the economy long term. And we have the two trade agreements, the Mexico deal and today the China deal. Overall, I give him a B. He's done a lot of needless upsetting of our allies and people that could cooperate with us regarding the Chinese. He hasn't got a lot done on middle-class issues, the kinds of things that might count in the election. You know, things like college tuition and student loans.
So we talk about consumer spending, though, being at, really doing very well. So doesn't that help the middle class also?
Well, sure it does, but I don't know that it's enough given the president's negatives. The way people regard him and his past behavior. I mean, we have to acknowledge that this is a very unusual presidency. It's the sort of thing that happens every 50 or 100 years. It's very much like the presidency of John Quincy Adams, where there was a lot of institutional opposition in Washington. And so that affects how people perceive him. It's hard to have more favorable ratings when you get a constant drumbeat from Bloomberg and the Wall Street Journal about his limitations.
What do you think at this point about his chances for successful re-election come November?
Well, I think that if the election were Valentine's Day, he'd be in pretty good shape. His problem is the election is in November, and we're going to feel in the first quarter and into the second the impact of the Boeing problems. Boeing is a huge, it's the elephant going through the snake. It's going to create huge reverberations through the economy in terms of growth, wages, and so forth. And unfortunately for Mr. Trump, the economy may be recovering in the third quarter and may have recovered by the third quarter, but he won't have that data going into the election. We don't get third quarter data until the end of October.
Right. So in the 1 minute we have left, then, what do you think he needs to do to have the highest chance of getting reelected?
I think he needs to come up with a middle-class agenda, something more substantive on prescription drug prices, college tuition, childcare, things of that nature. There's stuff there that really could be done, that needs to be done, and the Democrats are coming up with proposals, and the Trump administration is not.
Okay, so the economy needs to keep going, and if the economy keeps doing well, that's good. He has to do some things structurally for the middle class to help them. And 20 seconds left in the segment, what's the biggest thing that could derail him at this point beside the economy?
Oh, I think that if the impeachment hearings went the wrong way, if the Democrats put up a moderate candidate, a genuinely moderate candidate that had a platform, that would mean Joe Biden would actually have to have a vision. I don't think there's anybody else on their side that's moderate, but I think that Biden could give him real trouble.
Okay. All right. Peter, stay with us. We need to take a commercial break. You stay with us too. We'll be right back here in a moment on the Income Generation. Right now, let's welcome back Peter Morici, professor at the Smith School of Business at the University of Maryland. He's also a former chief economist at the U.S. International Trade Commission, and you could follow him once again at pmorici1. Peter, thanks so much for sticking around.
Nice to be with you again.
So it sounds like you've got some real concerns about the economy being able to maintain this growth in the second half of the year. Is that correct?
No, it's really the first half coming up. It's that we're now in. My feeling is that the Boeing thing is going to hit pretty hard, and that's going to take a little bit of the momentum off. I'm not worried about a recession, mind you, but I'm worried about progress in terms of jobs, wages in particular. because of the labor market softening as the layoffs extend through the Boeing supply chain. Now, on the positive side, the trade deal with China might start to kick in, but I don't know how fast that's going to matriculate. I don't know how fast the Chinese can really ramp up what they spend over here. $100 billion is a lot for the government to just point a finger to businesses. They buy $100 billion worth of stuff, even in China.
Yeah. So let's talk directly to our viewers, our income generation members, those over the age of 50, who hopefully at least are starting, if they haven't already, to make the transition in their portfolios from growth to income. What would you tell them for the best advice for 2020?
Well, you should have a target date for retirement. On the day you retire, a good benchmark is 50% fixed income, 50% equities. Now, you can have more in equities depending on the size of your portfolio. Another question to ask is, in your fixed income, it doesn't all have to be cash. It can be in a ladder. Do you have enough to last you 5 years? Because you don't want to be caught in a situation where you're selling stock if the market decides to go down a lot the year you retire, adverse sequence of returns. So if you have a 5-year ladder, you should be okay.
Yeah, it makes sense because it has to do with how much your income needs are determining your allocation. But on the other hand, the reality of it is today the income on some stock portfolios can match, maybe even exceed the income on some bond portfolios.
If you can get along on 2% of your portfolio as a retirement income, you're cool. Just put it in the S&P 500. That pays about 1.9. It's going to be hard to lose too much. But if you have to sell securities to live, not just live off the interest and the dividends and so forth, you don't want to be in a situation of selling a large number of securities or a large share of your portfolio when the market's down. You don't want to be selling 8% of your portfolio to get 4% for income.
Well, and our regular viewers hear me say week after week, don't put yourself in a situation where you have to sell, i.e. use the liquidation method to fund retirement income. So hopefully they're not doing that. But because they have half or maybe even some cases more than half their assets in fixed income, let's talk about interest rates over the next year or two. Do you think we're to stay kind of in a narrow channel, let's say on the 10-year Treasury between 1.5 and 2? Or do you see any major changes in one direction or another at this point?
I don't see a major change in one direction or the other. I would say this: if people are retiring with more than half in fixed income because they're going to need that in 5 years, then they shouldn't be retiring. They should work some more. I really feel that if you're not going in with at least half in equities and comfortable with that in terms of your medium-term needs, 5 years, 7 years out, then you got a problem. I mean, it's a very risky proposition.
So even with the Boeing issues, in the 20 seconds we have left, even with the Boeing issues then, it sounds like you're not predicting a major stock market pullback, maybe a small correction, if you will, but not a bear market per se. Am I interpreting you correctly?
Well, I'm not anticipating a bear market. I think the market will survive Boeing very nicely. It's probably already factored it in. My feeling is the market's heading up this year, that we're going to have enough growth to support, a 10% increase in equities in 2020. It won't be 2019 again, but how many years do you get 229% years in a row or something? You just don't.
Of course. And hopefully 2020 doesn't prove to be a blow-off top, which is my concern. So, Peter, thanks so much. I really appreciate you being back on the show. Yeah. Thank you.
Take care.
And you stay with us, too. We'll be back here in a moment, coming up with more on the income generation.